Welcome back to Tab U. My name's Katrina, joined today again by the lovely Nick Russell. Thank you, Nick.
Thank you. Always happy to be here.
Welcome. And our very special guest, Daren Burney, who I believe is an investment and developer principal. Can you please give a little intro to yourself, what you do, where you come from, and how you are property expert today?
Hi, my name's Daren Burney. I've been developing property coming up to 40 years now, so it's quite a long career. My background is that I started as an estate agent in the London Docklands many years ago, and from there I moved across into the actual development world, and really, it's been an interesting 40 years.
Hopefully we'll cover some of that off today then.
Sure.
Topic today is going to be on building a diverse property portfolio, and we will kick things off with question number one, which quite simply is, what does it mean to have a diverse property portfolio?
Diverse portfolio means that you're investing in sort of different asset classes in property. So residential could be one sector, offices, industrial, roadside retail. It's basically a spread of, I suppose, risk if you're building up a property portfolio.
Don't put all your eggs in one basket.
Yeah, in the main. Yeah.
In the main.
In the main.
And I guess, how do you build actually that's question number 2, so I won't quickly dive into that one. But when you're looking at building a diverse property portfolio and you're looking at the different asset classes, where do you start?
Start in an area that you feel most comfortable. My own background was that I started to invest in buy-to-let properties back in the 1980s. It was a market I knew well, coming from an estate agency background, but as time moved on, I felt there'll be better returns in commercial property.
Nice. And where are the returns now?
I can only speak, from personal experience. My main sector now, and something I've been concentrating on the last 7-8 years, is roadside retail, and that's it's a booming market at the moment, showing no signs of a slow up, purely because you've got so many entrants into that sector. It's not just the likes of the McDonald's, KFC, Starbucks, Costas. There are so many new entrants like Tim Hortons. Greggs are now rolling out drive-thrus, so it's a strong sector. It's also food, and I suppose, looking at it simplistically, everybody's got to eat. So even in recessionary times, people do cut their cloth accordingly, and what you'll find is that the drive-through sectors and the sort of cheaper food options actually are recessionary proof, an increase in turnover.
Can I just jump in? So obviously I have a little knowledge and experience working and talking to you about these over the years. The beauty for you with these, from my understanding, is the modular build side of things. So you could put a spade in. What is the timescale for you for spade in the ground to operational? Because that's quite key, right? Because you're not spending a year, 2 years building these things, then hoping to get the income and the lease in place.
Yeah, I think planning's still an issue. Planning's taking forever, with no real signs of improving. But once you've got a planning consent, we try and discharge all the pre-commencement conditions very quickly, and we generally like to be on site within a month. Typical build in modular form, we'd be looking to finish within 4 months and off site. Yeah, so it's a very quick churn.
Yes, it means you can do more and start receiving income much quicker. It means you can start recycling through more.
Yeah, it's got. I suppose the downside is that because your build program's 4 months, you're not really going to have time to try and get bank funding in place, because again, the time the bank appoint a monitoring surveyor, etc., you've more or less completed the site. So some instances you're cash funding development, but it allows us to do 2, 3, 4 drive-throughs at a time on various sites.
Where, out of interest, where's the drive-through best places? Are kind of in your service stations on a motorway, or just, I don't know, The only drive-through I go to, guilty, is the McDonald's on an industrial estate at home.
The drive-through, I mean, it relies typically on about 20,000 vehicles throughput per day. So,
Oh, wow.
yeah, high volume.
Yeah.
That's what the target audience is. Main A roads. I mean, we don't. Obviously, you have drive-throughs on service stations, but interestingly, the service stations are mainly the small Costa or Starbucks kiosks. A typical drive-through, you'd need about half an acre of land because you're building a drive-through and 26 car park spaces. We, as a company, we don't do much in London, and the reason being is that the residential values outweigh drive-throughs, so we don't waste a lot of time trying to bid with residential buyers. Our portfolio is spread all over the country in areas like Suffolk, Norfolk, the Midlands, Northwest, Northeast. Yeah.
Cool.
Do you get certain areas like retail parks or supermarkets? You know, I mean, obviously they get high footfall in some of those places and lots of people coming through.
Yeah, in the drive-through sector, I mean, we've done lots of developments with Aldi, with Sainsbury's, Tesco's. They're selling off some of their surplus lands because, again, their model's changed. Gone are the days where you need these huge sort of hypermarkets. They're looking at sort of smaller store concepts, and of course, with the larger estates comes a lot of land, a lot of car parking. So they've all been actively selling off some of their surplus lands, but equally they like to see a drive-through operator or another use that complements the stores. But yeah, we've done a number of sort of infill land in retail parks and supermarkets. Yeah.
Do you think the supermarkets in time will, so we've gone from having giant supermarkets. Do you think over time to smaller ones? Do you think there's a time in the future where we go back to the giant supermarkets and then they'll be back buying all your drive-thrus again?
My personal view is no, because at the moment, internet shopping and I mean, it's taking, I don't know what the stats are, but I'd imagine you've got to be looking at 30-40% online shopping. So why would you actually need to pay have such big floor spaces?
Yeah.
I mean, and again, even if you look at retailers now, they're taking much smaller spaces because their stock is held off-site where they could actually deliver much quicker and save paying sort of prime retail.
I mean, I was only driving down the M1 yesterday back from Birmingham. The size of the big boxes now that are these distribution. I mean, there's a little distribution centre, I think, just before Luton, as you come south. I mean, it must be over 1 million square feet, that building. I mean, so they can, and they've got what, 200 lorry ports. Why do they need to have these giant stores? They can just keep delivering smaller stores, more stores, and get their stuff out.
Yeah, I mean, retail's changed in the last 5 to 10 years beyond all recognition, and the retailers are now attuned to online sales. Same as look at the, you mentioned about a large space. Look at the Amazon fulfillment centres. I mean, if you're standing on one end of one, you can't actually see where the other end finishes. They're so vast.
And you'd want a golf buggy just to get yourself around.
Yeah, and it's interesting because again, for deliveries, you've actually other retailers supplying Amazon have to book in space months in advance, I believe. And if you miss your slot, you're buggered.
Yeah. Fair enough. Fair enough.
Yeah.
You're not, I think your P45's on the desk, isn't it? Moving on to question number 2, briefly touched on it, but how can I build a diverse property portfolio?
Well, I can only speak from my past experience. As I said, I started off as an estate agent in London Docklands, so I came with a residential background, but then I was looking at other sort of asset classes, and I dipped my toe into the water and bought a couple of petrol filling station sites that were made redundant, and on one of them I was successful in getting planning consent for residential, and on the other a commercial. In fact, I developed a co-op store many years ago, so that was my first sort of dip into the commercial the market. As time's gone on, I mean, I've tried to sort of stay with a sector that I've sort of feel comfortable with. I personally, I like to sort of buy or develop smaller estates, If you make a mistake on a smaller purchase, you can generally sort of rectify it. It won't sort of set you back too much. If obviously you've got a massive development with only one sort of angle and one way to sort of develop that out, and that doesn't go to plan, then you've got a major issue because, as I said, it tends to sort of weigh down the whole portfolio.
So there's alternative uses when you're looking at developing something. So if something doesn't work, you've always got maybe a second idea of what could work just in case the first idea didn't. I mean, just having, as you said.
Yeah, I mean, and that's one of the reasons why I moved into commercial. When you're a residential developer, you rely on where the market is. Mm-hmm. So, and timing, because if suddenly the market changes, interest rates go up, and you're getting near to finishing a development, prices go down.
Sounds fairly apt for the time.
Yeah, and there's no, the options there are, if the market changes, you either rent the properties or sit there waiting for buyers, but there's really no other play there.
And the cost of debt starts killing you over time.
Yeah, absolutely. Cash flow can kill you, and that's another factor. What we've always tried to do is be mindful that the market can change and be opportunistic when that market does change. And it's interesting though, because as I said, my specialist sector, roadside retail, at the moment is probably one of the few sectors that is still booming, and it's frustrating because we're sitting there with a cash pile waiting to buy sites to develop, but don't see a huge amount of value at the moment.
And do you value cash flow over capital growth, or vice versa, or equal?
I would say cash flow. How many people have gone bust sitting on some wonderful assets, but
can't poor. Extract their equity?
Absolutely.
Yeah.
And when I was a very young boy, my uncle told me, or he made me keep repeating a sentence, which was "cash is king." And again, I also have been through 2 recessions so far, and I learnt the hard way.
Yeah.
And it puts you in good stead. And as you get a bit older and wiser, you try to learn from your mistakes. So,
well, on those mistakes, I think it's important for people listening to know what didn't you see and didn't you do that you wish you had done, maybe with some of those mistakes and maybe some of those recessions that you didn't maybe cover off, and you learnt through obviously the difficult times and experience that you could give advice on.
Interesting question. When I look back, probably I didn't see, or I didn't sort of see the market changing as quickly as it can do. This current economic climate, it's an interesting one because, again, we were spoilt for so many years with very low interest rates. Even now, when base is at 4.5, it's not hugely expensive money, but again, some deals will work, some won't. I mean, I'm fortunate because I've got to a stage where we don't have to keep buying and keep developing. We could just shut shop and concentrate and manage the portfolio that we have, and we'd be quite nicely positioned. And as I said, if an opportunity comes up, then that's fine. I suppose going back in time, I was probably guilty of over trading, probably over committing too much.
Over leveraging?
Yeah. I mean, again, when you're young, you don't envisage, if your gearing is sort of 75-80%, you probably don't feel the market could come down 25-30%, meaning you're underwater, you're over leveraged. But you learn from experience. I mean, now across the board, our overall gearing is about 52%, which is probably not a bad position to be in at the moment. So, yeah.
Yeah, even if it came down a little bit, you'd still be able to probably refinance those banks if you hit any sort of trigger points in your clauses regarding loan-to-value covenants or anything like that.
Yeah, I mean, the other thing is we stress test our own portfolio. So about 2 years ago, we decided to sort of look at if 20% of our tenants defaulted, and we sort of worked out, can we sort of manage things, and we built around that factor. Fortunately, at the moment, I don't have one rent arrears, which is quite unique. But, but as I said, we're in a sector where we're mainly weighted in drive-throughs, roadside retail. we've been doing a few hotels for Travelodge recently, and again the hotel market, the budget market in the hotels, it's a good sector to be in. You know, people do still have to travel, still go on business.
Yeah.
We're comfortable in the budget hotel market. We've got long-term leases in place there. If I was sitting with management agreements and 5-star or 4-star hotels, I'd probably feel a bit nervous in the current environment. But again, it's just deciding sort of, is the risk adequate? And yeah, we're in a quite a nice, comfortable position.
Good to hear.
Are you self-taught? You started as an estate agent and then just sort of built your portfolio up from there. What do you need to know, or what do you wish you knew when you were younger, or what do you know now?
I was self-taught. I joined my father's estate agency. I was always very entrepreneurial, and after working there for a couple of years, I kind of got the appetite to go off and do my own developments, and
The father and son dream was over.
absolutely making some more money. And again, I wanted to challenge myself and develop. Basically, I mean, everything we build and develop, we keep for our own portfolio. So I take a lot of pride and satisfaction. I was quite good in Monopoly when I was a kid as well. So that, and I've got an appetite for the little green and the red hotels and houses.
Now you play for real.
Yeah, absolutely. But again, when I go to see a site when it's finished, I take a lot of pride and satisfaction. And for someone who's self-taught, I mean, we just completed a 100-bed hotel in Ipswich town centre for Travelodge and handed that over Friday, and it's a great feeling. You know, when you've got a family business and to sort of look at your hotel in front of you and know that you've developed that, and whether it's a legacy,
it was acceptable.
Absolutely. Yeah, and it's a nice legacy, really.
Yeah.
So, yeah.
Cool. We'll move on to question three. Question three. What are the benefits of having a diverse property portfolio?
Spread of risk, really. I mean, what you generally find is if you've got a wide spread, some sectors go down, some stay the same or rise. It's just about spreading a risk and not putting your eggs in one basket.
Good. And what are the challenges associated with building a diverse property portfolio?
Well, if you're building a portfolio, the difference now and then, maybe 15, 20 years ago when I started, is that now you're probably having to put in 30 to 40% equity on every deal. Banks don't like to be sort of over leveraged, so you'll probably look at, well, in the current market, 50 to 60% gearing is what you get. That means you've got to find a lot of equity, so it's a difficult time to build a portfolio. When I started buying buy-to-let properties, you could generally get 80 to 95% funding. So, and again, on a rising market, you've got equity in a property, you can then quickly refinance, draw out equity, and then buy more property. And that's how I sort of started to build up my residential portfolio. But I think it's a lot more challenging now because of the banking crisis and collapse a few years ago, and new banking laws where banks just can't overextend themselves on the loans.
Yeah, I mean, also the low-yielding nature of particularly southeast property, right? Southeast England property means that you can't borrow much anyway, because each property now has to be effectively self-sufficient in supporting the loan.
Yeah.
So you'd be lucky if you got 60% on residential right now in some areas of London, and you might only get 40, 45%, especially as rate rises have gone up.
Yeah.
It's been stress testing's gone up, but realistically, yields haven't changed, and probably the property prices haven't come down enough to warrant you borrowing more money. So.
It's difficult. I mean, your net return is going to be really low.
Yeah.
The only way you'd probably invest in property is if you see real capital growth, and in this current market, with interest rates being what they are, I don't think you'll see the capital growth there. So, but London's a very resilient city, and there's so much development going on, and I drive around and look up at all the new developments, and yet. From what I see, they're finding buyers. They're still being sold. It's incredible, and I don't see prices really have come down at all. Maybe marginally, but London, as I said, it's one of the main cities, in the world, along with New York, and prices remain high.
How did you find the transition from residential to commercial? Because obviously it is a big difference for some people when understanding commercial leases and different types. How did you find that jump? Obviously you said you're self-taught, so learning that on the job, did you take advice from others? Did you just sort of take the plunge?
I took advice from lots of friends already in the commercial market, but it's I think we were talking about earlier. It gives you different options if you buy something, if something doesn't quite go to plan, if you don't get the specific planning you require, that you can vary that. So and again, real value is if you do a rent review and you get a very big uplift, the added value on that property could be enormous. So for me, I was a lot more excited by commercial property, really. Yeah, I mean,
Not so dry.
Yeah, not so dry. I mean, I've still got my residential portfolio. I mean, that's, again, I would say to anybody, if you're building up a residential portfolio, you treat it as a medium to long-term play. Don't view it as a short-term play. And again, don't panic. If you look at it as a medium to long-term play, the markets will go up, the markets will come down. I always viewed the residential side as a bit of a pension for me. But again, I've still got the original portfolio that I built up nearly 30 years ago, and it produces good income to the point where it stood me in a good position, because when the market turned and the banking collapsed, fortunately, what happens in recession is rents do go up.
Yep.
And again, it gave me sort of a monthly cash flow which could fund and carry on all the commercial developments that I'd committed to at the time. So residential for me was a bit of a saviour a few years ago.
Is there a project that you're most proud of that you drive, if you ever drive past it, you're like, there she is, or he?
There she is.
Or he.
Well, the 100-bed hotel was the largest hotel that I've done to date for Travelodge. I got a lot of satisfaction from that. But I guess, every development I go to, I can't wait to it to be finished. I get my quantity surveyor to send me photos every month if I can't get up to site myself, and I just I still got the same sort of appetite as I did 30 years ago to finish a scheme, and just love, I suppose I love every one of my properties. I know most of the drive-throughs look identical, but I get a lot of satisfaction of actually seeing a project from start to finish, and then that lasts about a day because I'm off to the next one.
Always.
Yeah. Actually, to answer your question, and long-winded, I've just finished the most beautiful converted pub in a place called Glatwell in Derbyshire. We converted it to a Starbucks, and the building absolutely looks stunning. So if any listener goes past a Starbucks on the road called The Hill in Glatwell, Derbyshire, they're in for a treat.
We'll go next week.
Yeah, I think so. I think it's about right. Only fair we take a look.
Been involved with Boston. You got involved with the football club. Was that an interesting one? You helped with some of the infrastructure there? Yeah,
we didn't. I mean, what happened is I viewed the site, and at the time, I met with the developers, Chestnut Homes, who were doing all the residential, but they had a number of commercial plots, and they explained to me that in time they would relocate Boston United's football ground to opposite the commercial plots, because Chestnut Homes owners also own the football club. But it was fields at the time, and there wasn't much going on. But I just, like I've done for many years, trusted my gut instinct and had a good feeling about the site. And we bought 5 commercial plots, which have all since been developed. We built a 56-bedroom Travelodge initially. We built a Burger King, a Starbucks, a Costa, a Greggs.
So it's probably transformed that area of, which is always quite a nice thing to see as well.
Yeah, absolutely. I mean, Boston is it's an interesting place because going back many years ago, you had a lot of the Polish immigrants who were doing farm picking, where they've made good, successful lives, and they built the town up. It's one of the probably the economically one of the fastest growing places in the country. Again, the plots that I bought where there's it's along the A16, which is the gateway road into the town.
Yeah.
And yeah, it's proved successful. I mean, the other interesting thing is when we were building the commercial plots, the contractors we were using were having to stay miles away, so we knew that there was a real undersupply of hotels.
Right. Okay.
As I said, we built a 56-bed travel lodge.
Skegness is only up the road.
Well, that's one of our next projects.
There you go.
Come on
You're
to it.
redeveloping Butlins.
Absolutely. But since we built the hotel, I mean, their travel lodge has been running in sort of 90-something% occupancy. So we're actually about 2 weeks away from finishing a 20-bedroom extension on site, which will take it up to 76 beds. But again, got to know the local authority, East Lindsey District Council, and Skegness is also in their remit, and they wanted to see a travel lodge developed in town, and I've ended up buying a site from the council and been successful in securing an 80-bedroom hotel consent with a drive-through.
Brilliant.
So that's a project that we'll be hopefully bringing forward later on this year or beginning of 24.
Oh, exciting.
Got to be in it to win it, I suppose.
Well, but I must say though that East Lindsey Council is a really sort of positive council. They're one of the few where they actually appreciate the investment coming in. I mean, so many times, you know, we speak to councils, but they lose sight of the investment and the, you know, and again, when you're building a hotel and the customers it brings into the hotel, the secondary spend that falls sort of, you know, into the sort of surrounding properties and businesses is quite significant.
Yeah.
But yet sometimes you don't feel appreciated by certain councils, whereas East Lindsey,
You're a property developer. You're never appreciated.
I know that. I know that.
So moving on to question 4, which is what type of property should I consider including in my diverse property portfolio? We've briefly touched on it, but resi, commercial, travel lodges, drive-throughs.
It's a difficult question because everybody's own financial position will be different. You know, some people will be purely looking to buy 1 or 2 properties just as a pension play. Residential, you know, probably a good fit for somebody. I mean, commercial, I would say I would avoid the high street personally because I think retail high street has changed forever. I don't quite know how local authorities are going to bring back sort of, you know, the high street to make it, you know, a good spread of.
Even a shop with uppers, so they've got maybe some resi above and a shop below. Or would it be subject to the tenant that you've got in the shop below?
Well, again, it's subject to the tenant. If you've got a Costa Coffee as your tenant, then you know you've got something like a 6% yield investment. But if you've got the, I don't know, a barber shop or
local
you know,
dog groomer,
it's you know it's difficult because again, you know, a lot of the leases might have 8-10 years to run. At the end of that period, will those occupiers want to stay there or will they want to surrender? If you've got a good covenant that surrenders, then the value will go down enormously.
Also, I suppose it depends where, right? If it's a barber but it's the only barber in town, then you've probably got a good chance it might stay. But if it's a barber and there's 7 on the high street and it's like maybe a London borough, you just don't know how long they've got to last. Because also rents are rising so much, how do these small businesses keep there anyway? Yeah,
absolutely. I mean, I personally, I fear for the high street retail because, you know, every year internet shopping, you know, you look at the stats, they just keep rising and rising, and the difference in internet shopping. I use my wife as the example here because a few years ago she'd like to go to clothes stores, try on something because she couldn't return it online. Well, now you can return everything online at no additional cost. In fact, Amazon Prime allows you to buy several sizes and then you decide what you're keeping and return before they even charge you. So it's changed retail beyond recognition. I would be careful. I mean, you know, when you look at the auction sites, I mean, you still get people, you know, who haven't really got property experience buying and paying a lot of money for property because they look at the covenant, they think that's quite a good return, but they're not thinking ahead of what happens if that tenant decides that they're going to surrender or it comes to the end of the term and they just don't want to return, you know, to stay on. So it's a really difficult question for me because, you know, how can you advise somebody where they're thinking, you know, I should be buying commercial, I should be buying residential.
It's broad.
It is broad. I mean, I would say stick to a local property. I mean, doesn't make sense why you'd want something at the other end of the country. Again, when I was building up my residential portfolio, it was all East London, Essex based, purely for if anything went wrong maintenance wise, or just needed to inspect or keep an eye on them. It was only within a half an hour, 45-minute drive. Now it's different because we've got commercial properties up and down the country, but equally we employ contractors at all different parts of the country, so we're fully equipped to to respond and visit the properties regularly.
And do you manage your self-manage your entire portfolio, or do you have managing agents?
We manage everything in-house. There's a few properties with multi-tenants that we let managing agents run, who are better equipped. But yeah, generally, I mean, in terms of all the residential, everything's done in-house.
Okay.
Yeah.
Do you just invest in the UK, or would you touch abroad?
I've invested abroad over the years, but now, I'm 58 years old. I don't, I've gone past the point of wanting to spread in different countries. I just want to carry on developing, and until I get to a time when my daughters sort of want to drive me out of the company. And,
and the father-daughter dream is over.
Yeah, absolutely. But no, as I said, I've no plans to step down. I still go into work each day, and thing with properties, you never know what the next day, what the day, how it evolves, and what opportunities land.
So moving on to question number 5, final question. Question is, what strategies or approaches can I use to diversify my portfolio? But maybe now, having spoken to you, did you apply any strategy, or yeah?
My own strategy, and again, a different part of my life, we had a large opportunity fund and a joint venture with Bank of Scotland. So at that period of time, we were buying larger asset classes like large retail parks. But that, we were, when the sort of banking crisis and collapse, we unfortunately, we lost the portfolio. I mean, the Bank of Scotland decided to sell not only our portfolio, but most of their other joint ventures to some of the American funds. So all that hard work that we've done over the years.
Was that the three-headed dog?
Yeah.
Cerberus, by the way, for anyone who wanted to know.
Lone Star in my case.
Oh, fine, right.
So I thought, at that time, I thought I'm 50 years old, or around that era. I thought, you know what, I want to go back to basics, go back to what I used to do, not overextend myself. It's a market I knew well. I bought lots of sites, developed lots of convenience stores, and I was quite interested in the drive-through market. The chap who basically started Metrobank, his background in the States was a number of drive-throughs, and you kind of look at the longevity. I mean, Burger King, McDonald's, they've all been around 50, 60 years. I thought, is that a business that's recessionary proof? And as I said, the reality is that when times are tough, people cut their cloth accordingly. I mean, we get a bit, it's like we're in a bit of a bubble, because there's a lot of people out there. We go out, if we want a meal, we go out and have a meal 3 or 4 times a week if we wanted to. A lot of people have to save up, and they can only afford 1 meal a month. So when an economic hard time like now, where people's mortgages have risen several times in a short space, people are finding it hard. And London also is a very different beast from the rest of the country. And again, so what we find is that things like, if you've got Domino's or the pizzas, they thrive in recessionary times because it's a cheap meal for a family. So I thought that would be an interesting market to get into. I'm a simple person. I just run with gut instinct, really. And again, I think the trade counter market is good. That's generally stood well in the test of time. Through COVID, interestingly, it was a boom market because everybody was at home and suddenly decided that they want to spend money and do up their homes. So, there was that was an interesting time. And as I said, we've now probably been through every recession that we can think of. We came through COVID. Yes, at the time we were sympathetic to tenants. We're all in the same boat. You have to be realistic, but we came through COVID, and we worked with our tenants. We did some lease re-gears in exchange for rent, and we've come through it, and we're in a really good place. And you kind of think if we can get through, a COVID scenario, then we can probably get through anything.
How do you stay up to date with do you follow trends, or are you the trendsetter?
Am I the trendsetter? I would
Maybe
love
after this, you're going to be loads of people competing against short drive-throughs.
I would love to say yes, but I read a lot of property information. I always, I'd like.
You're an
to
avid listener of Taboo.
Yeah,
the podcast.
Something like that.
Yeah, I find it interesting. But at the end of the day, I trust my own gut instinct. That's the reality. But I've also got a sort of a diverse working life, because I'm also working with Tottenham Hotspur on some of the property regeneration around the stadium, and that is a diverse from what I'm used to doing in my own business day to day. But it's very interesting work. It's very challenging work.
How did you get into that?
Well, I was asked by the chairman many years ago to try and assist on some of the land assembly on the new stadium, which I was successful on doing. And then he asked me to stay on and do a few more property projects and matters, which I did. When the stadium was built, that was the sort of the point where I finished my work for the club, and it was time to sort of move back to my own business and concentrate on that. Not that I was wasn't. And about 18 months ago, I was asked to come back and take up a similar role. And again, how many times or chances in your life do you get to work on a major London regeneration project? And I'm quite passionate about that, because again, you're making real change to an area there. Major change. And
what is that, planning? Is that
planning? It's literally putting together a whole sort of regeneration. So it's new homes. It's
right.
It's not just about providing new homes. You've got to have sort of commercial buildings alongside
amenities.
We've got one of the projects we've been working with Saraband, which is the McQueen Foundation. They're moving into 2 listed buildings next to the stadium in a couple of weeks. And again, on the back of that, in the last few months, Spurs have been, had write-ups in Vogue. It's a totally different market. It's diverse. We're working on taking forward the hotel now next to the stadium. There's lots more going on, which is not in the public domain, which I can't mention. But
do you think it will start to? Because I still don't think Tottenham's been probably gentrified in terms of as an area of London. It's still very individual, the shops and the areas. Do you think it'll start to gentrify the area a bit more?
Well, gentrified is not a word we can use, of course. No, I think that it's not all about gentrifying an area. I mean, the reality is you have.
What I mean is more commercial, in terms of just more commercialise the area, more restaurant chains that you'd see in certain other areas that have been started to be redeveloped a bit more.
Yeah, it's getting the right mix. Yes, you will get various brands. I mean, Tottenham's a very eclectic area. It's diverse community. It's not just all about providing new social housing and knocking down all the crap, because there's a lot of crap council housing, and people shouldn't be living in some of the conditions that they are. But the interesting thing with Tottenham, and again, we've got a chairman who has the vision, and the legacy for him is changing an entire area. Yes, football's the fundamental business of the club, but again, he's a visionary, and working with Daniel, he's probably one of the hardest taskmasters. His attention to detail is incredible, and that's why when you look at the stadium, it's the best stadium in Europe. But he's also got the desire to change the area, but getting the right mix, making it a major leisure destination for the UK, well, London and the UK. And again, when you look at the proposed master plan, which Lend-Lease and the council have actually put into the public domain, it's not inspirational. All it is providing some new social housing.
Yeah.
And that's, when you've invested the money that Tottenham Hotspur have on the stadium and the infrastructure, again, we can't stop there. We have to continue and make it, really a great area to live and work in, and we believe we can do that.
Yeah, you don't want people just having that £1 billion, asset that only people come down to the area for once every 2 weeks, call it, for 9 months of the year. I mean, there's just a waste of sort of opportunity for the area just having that.
Yeah, absolutely. And as I said, it's probably one of the few last remaining regeneration areas, but we're trying to give the regeneration a sort of its own sort of something unique about it. You're not just replicating what Hoxton or a borough has been. And that's quite an interesting thing to try and work on and do. But yeah, if I went off and came back in 10 years' time, I think I would be quite amazed at the change that will happen in the area. And yeah, we've got a football business there, but there will be so many more other things to come in that area. So it's very exciting, and that makes up part of my working week.
So, before we wrap up, one last question: what is the best tip you can give for people starting out in property?
The best tip is look at property as a good medium to long-term investment. Don't expect very quick returns, and just be patient, because the market can go up and it can go down. But it's a great asset class, it's a great pension play, and generally over time you'll make very good returns.
Perfect.
Brilliant.
Any more?
No, I think we covered everything.
Darren, thank you so much for joining us today. It's been very insightful, very interesting, and I'm looking forward to visiting Tottenham soon. Not for the football stadium, for another reason.
For the go-karting.
Exactly. Thanks to all of our listeners. I hope you enjoyed it. Don't forget to like, subscribe, share, everything, comment, and I'll see you next time. Bye.